Hi everyone, welcome back to the second episode of Monday Madness. So obviously this video is recorded on Monday and then uploaded on Tuesday. So this week I'm only going to be explaining two trades. The reason for that is I want to show you guys that some weeks you have 10 trades, some weeks you only have one trade, and some weeks obviously only have two trades. Last week I only saw two good opportunities, and both the opportunities was also shared via the free group where we are running with the free 1 month course. I explained EURUSD exactly to the point, from hitting that level to breaking through and selling off. So you guys can check that out on our free Telegram as well, or by joining the free course. Hope you guys enjoy. Hi everyone, so EURUSD, let's start with EURUSD. So EURUSD, we're looking for a sell-off. Okay, so to actually talk about the sell-off, first of all, we need to look at the dollar index. Okay, dollar index is the opposite of EURUSD. We have the euro versus the dollar. Okay, but the dollar has 85% strength within euro USD and has an 85% effect of where EURUSD is going. That means if dollar index is going up, then EURUSD is going down. Okay. The reason for that is the euro is a free flowing pair and the dollar is obviously a strong currency. So we're looking at dollar index beginning of the week. So what we saw immediately was a sideways market. We have a ranging market over here. So we had one touch, two. We needed those two touches to create a sideways market. There was our third touch, okay? So we knew market's going to drop from there. Third touch always has probability move. But we were not in a selling trend, we were in a buying trend. Okay, so we had the third touch on the bottom now for the buy. So we knew we're going to push up from there. So that was an indication that we're looking for EURUSD shorts. Then from there, what we had to do is go to higher time frames and identify a selling point. Putting in a trend line is always simple. 0.1, 0.2 extend. A lot of people will do 0.1, 0.3, but it's always 0.1, 0.2 extend. So this will also be seen as an inside trend line. That will be seen as an outside trend line. Okay, so now we're sitting with the inside trend line and we have multiple technicals once again lining up for the sell. Okay, so number one, we had the trend line. Okay. Here we had resistance. Resistance will be where price is always selling from. Okay. Reason market pushed a little bit higher is to go and take out that trend line to get more sellers into the market. Okay. Then there will not be a fib. If you have to add a fib, you'll add it from that high to that low. We'll not add it there because that was only a push up for the weekend gap. But we can put it there if that feels better, but I prefer putting it on that spike. Okay, just like last week, we had a 71% fib. So we had the most confluence to sell from this specific level. All we had to do, drop down to lower time frames. Okay, what I explained in the previous video is always when price pushes up, it forms a little bit, there's always a spike to the left-hand side, which in this case was this little spike over there. As soon as we close below that level, okay, that level over there, we're looking for a sell. So looking at the sell, we had once again multiple things lining up. We had our 2.5 level, which is the psychological level. We had our left shoulder, head, right shoulder, perfect head and shoulders pattern. We will have a 50% fib pullback. So fib will also come into play. So there's so many different technicals we could have added to get the trade. We could have even gotten a little bit of a entry on a breakout trade, 0.1, 0.2 extend, breakout and a retest and a sell-off. So how your position will look here is you'll have a short position over there with the target being somewhere in the range we are now. Stop loss above that previous spike, and we'll have our stops over there. So we'll have a perfect 1 risk and 5.5 reward. I usually prefer pushing my stop losses to about 300 points, but once again, that is just a preference of how you feel as an individual as well. All right, let's go into EURGBP. Okay, guys, the second trade I was looking at is EURGBP. So another thing people will always say is don't contradict your trading. So don't sell Australian dollar and buy Australian dollar. Okay, that is fact. So you can't buy EURUSD and then sell JPY, for example. Okay, but with EuroPays, because it's a free flowing currency, that means the other currency, for this example, it's the GBP, has more influence in the market. Okay, it will only be like 50%, 15% influence that the euro will bring to the table. So this was the second trade we were looking at. Okay, we're looking for a buy on EURGBP. Okay, pretty simple reason why we had this push to the downside. Okay, that caused us to touch the third time on the trend line, 1, 2, 3, fourth touch on the outside channel. Okay, then obviously we didn't want to buy there because we were in a selling trend. Okay, still didn't wait for the break and the buy there because we're in a selling trend. Over there, we closed above that point, creating a new higher high point. Okay, from there, price was pushing back, so we knew we were looking for a buy. Okay, there's a few reasons for this buy. Number one, left shoulder, head, right shoulder, inverted in shoulders, just like with EURUSD, just inverse. Okay, we had 0.83, which is a psychological level. We had a support level over there, which is a perfect buying level. We had a perfect spike to our demand zone, so multiple indication. Fib will be from a previous low to high, perfect tap on the 61 fib, break back above, and a buy. Okay, so your buy would not be there, your buy will be in that range. Okay, wait for it to pull back. Let's quickly go to 1H. Okay, as soon as you break below, you will create a little bit of spike with the first break back above. There we close above that spikes, and as soon as we close above the spike, we can add our fib. There's our 38% fib, and we'll be looking for a buy anyway in that range. So this is the position I would be taking. Okay, the only trade I actually took was EURUSD. I didn't take this one, I missed this one, it's just not at my PC, and your stop loss will be below that previous spike. Okay, well, will my take profit be there? Let's quickly look what we had here. Okay, we'll have that minus 0.27, minus 0.27 level will be our final take profit. Okay, obviously within that we'll have 2 or 3 entries. I usually put in 2 entries. My first take profit will be over there. Let's go take out the fib. My first take profit would have been at that level, and then I'll expand my second CP into the highs. Okay, so obviously we can see why price turned around there. Could have that outside channel coming into play. Once again, there's multiple reasons why market will pull down, and now we're obviously creating that channel as well. Okay, so that was 2 pretty simple trades. Both of them were 1 to 5 minimum risk reward. So just like that, easy 10%, but not pushing the market, not trying to push opportunities, waiting for the shift of momentum, and then waiting for your trade with the trend. Okay, hope you guys have enjoyed this the second episode. I'm going to keep doing this. If you guys have any thing you guys want me to add, anything you guys would like me to explain a little bit more, feel free to just comment down below and we'll sort it out. Cheers, guys.